Dear viewers, Bitcoin and altcoins are under pressure again. Of course, this is partly due to the renewed escalations in the Middle East and, yes, the precarious situation surrounding the Strait of Hormuz, which by now can almost be compared to a pirate route. We'll discuss the direct impact this has on the coins and, of course, the risks still looming from a possible shutdown and the midterms, as well as some economic data we're keeping an eye on. And I'll be discussing exactly these topics over the next few minutes with Oliver Michel from tokentus. It's great to have you here, Oliver.
Hello?
And that's it again. Just as quickly as it came, the joy over rising Bitcoin and altcoin prices has faded, along with the new escalation in the Middle East. And this issue has been with us for so long now that you can't really say political market rallies are short-lived, can you?
Well, Johanna, no matter what happens in the US-Iran conflict, whether positive or negative, it immediately affects the price of oil. And the price of oil affects everything else. And unfortunately, our cryptocurrencies are suffering much more from this back and forth than, for example, the major US indices like the Dow, NASDAQ, S&P, and Russell. And only when things calm down again down there, Johanna, will these big swings, this volatility, and these surprises like the ones we had yesterday probably stop happening. And I do believe that these are day-to-day fluctuations we have to deal with, but they won't change the long-term positive bullish trend.
As part of your bullish strategy, we're of course featuring a buy button for the first time in this interview on our 160th episode, which we'll discuss in a bit more detail afterward. Still, we first need to figure out what's actually causing crypto prices to drop so rapidly right now. As you already mentioned, it's the rising price of oil. Brent crude, the North Sea variety, rose by nearly 10% last Sunday and last Monday, and that, of course, is fueling inflation fears. And when inflation fears are present, it has a direct impact on the Federal Reserve's actions and, consequently, on expectations regarding the future path of interest rates. Last week, we saw the Fed minutes, the minutes from the previous meeting, and they made it clear just how divided the board members actually are on whether rates should go up or down. And yes, if the war in Iran were to escalate further or flare up again, that would naturally cause the market to expect the Fed to raise interest rates a bit more, wouldn't it?
Yes, after the temporary ceasefire, Donald Trump declared war again yesterday, and informed Congress that he's now waging war again for another 60 days so that he can do exactly that without Congress's approval, so to speak. And as you already said, our cryptocurrencies are risk assets, and the greater the risk is or becomes anywhere in the world, the more investors pull out of this asset class. And yes, as you already mentioned, last Wednesday we got the minutes of the FOMC meeting held on June 17th. And there was still complete unanimity in favor of keeping the current key interest rate unchanged at the June 17th meeting. And that's exactly what happened. Everything remained unchanged. But the minutes provided us with the following information. Looking at the rest of the year, 50% of the members, the voting members, were in favor of at least one increase by the end of the year. And as you can see, the market is now pricing in what just happened. That was last Wednesday, when the weekend's conflict hadn't really been factored in yet. Here, it's been factored in as of this morning. You can see that they probably won't change anything at the next meeting, but in September and December, the market is expecting an interest rate hike. And that was also the reasoning of those who said, well, we're expecting an interest rate hike simply because of energy costs and, parenthetically, the oil price. But there was also the other 50%, and as you already mentioned, opinions were split right down the middle. Those who came forward and said, but if we raise interest rates, then we'll immediately derail the economic recovery, so we're either staying neutral or cutting rates by the end of the year. So from that perspective, it will be interesting to see how Kevin Warsh manages to reconcile these two camps and how the Fed handles things in relation to global markets.
So, just like the board members, we're torn between these two options. On the one hand, there's the need to support the economy a bit, or perhaps even stabilize it. And on the other hand, of course, there's the need to prevent inflation from flaring up further. We're still expecting inflation data this week. Today, the consumer price figures for June will be released. That means we're looking at a 4.2% increase from last month. Expectations, however, are now quite a bit lower. So it's clear that as far as the rise in oil prices is concerned, that's not going to happen in June just yet. That was still, well, to put it cautiously, a period of ceasefire. And of course, we'll be curious to see if inflation is actually on the decline. And tomorrow, Wednesday, we'll also get the PPI data. And here we're seeing the same pattern. Last month, we saw a 6.5% increase, and the consensus now is that it will be only 6.3%. The big question, of course, is can this expectation actually be met? And if it isn't, that would likely be more fuel for the fire regarding a rate hike by the Fed, right?
Yes, it's just as you say, the moment expectations are announced, which in both cases are lower than the previous month's figures, and those expectations aren't met, no matter what justification is given afterward, we'll see volatile markets and there will be some jitters. So given the already tense situation, we can only hope that we'll see exactly these expected values of 3.8, 3.9, 6.2, 6.3, and then I can well imagine that the market will ease up accordingly. But in the long run, Johanna, we're in the middle of this trend right now. We've described it often enough. Inflation on the one hand, a slowing economy, falling prices to bring products to market. In other words, disinflation. Right now, everything is hanging in the balance, and the Fed will just have to figure out, especially in this particular context, how to position itself accordingly.
Throughout our interview and in all my market coverage as well, we've repeatedly held out new hope that an agreement would finally be reached. Things were looking promising as far as Iran and the US were concerned. And just now, when the ceasefire had actually lasted a bit longer, the coins started rising again, and that glimmer of hope was just dashed once more. As you just mentioned, Donald Trump has declared war yet again, and with the measures the US wants to implement at this bottleneck on the oil route, it really feels like the whole thing is turning into a pirate's route. Let's go over this again. What the actual changes are right now, what the tariffs are, who's allowed to pass, and who's limited to just 20%. There's already quite a bit of power struggle going on in that strait.
Yes, I deliberately try to avoid using the term pirate because I might want to travel to the US again someday.
I don't have to go after all.
Yeah, it's exactly like you said. I'd love to be at one of those meetings where these guys get together and put their heads together to figure out what are we going to do about this deadlocked situation. And then someone says, well, and that's what Donald Trump posted yesterday, which is why the market took such a massive dive. He posted, so we're going to start the Iran blockade again. So not only will Iran's ports be blocked, but all ships carrying cargo from Iran will be blocked as well. But as for the others, we guarantee them safe passage and basically make sure nothing happens to them. And for this protection, which of course costs money, we basically want a 20% toll, a road toll, as they say, on the value of the cargo. You really have to think about that. That used to be a free trade route, and suddenly something like this happens. That's quite a great story. I mean, how do you come up with ideas like that? There must be a think tank behind it, constantly churning out new ideas on how to get out of this deadlock and maybe, just maybe, turn a defeat into a victory somehow. But I think the way things are going here, the way this is unfolding, they're just digging themselves deeper and deeper into the sand. And at some point, they won't be able to move forward at all.
Tolls are something we actually still recognize from old movies set in the days of knights, where stagecoaches were given safe passage.
We had a castle on every corner from which you could shoot out onto the water.
But you still want to travel to the US. But of course, those aren't the only ones, even if right now it's a bit, something to look at with a smug smile, because the paths the US or Donald Trump with the US is taking are just so unusual. Nevertheless, these aren't the only risks we face, even if that's the smoldering fire we keep seeing time and again. There are actually other risks right on our doorstep at the moment, if you consider the timeline. Which ones?
Absolutely, Johanna. It's really important that we start to realize that on September 30th, the fiscal year ends in the US, and that runs through September 30th. A corresponding budget must be drawn up for the following year. And we know from painful experience how long it took to finalize the last budget. And right now it looks like we're heading towards something similarly disastrous, which of course would have a huge impact on the US markets and the stock markets, and of course on our cryptocurrencies as well. We need to keep an eye on that. People are already trying to work on solutions to avoid the shutdown, but it's already on everyone's lips. The second thing we need to keep an eye on, of course, is the midterms and how the political landscape is shifting right now. At the moment, the Republicans, under Donald Trump, hold the majority in both houses. That is, both the House of Representatives and the Senate. But based on the current predictions, and you have to call it what it is, it looks like the Republicans will very likely lose the House of Representatives by about 80 to 85%, and will be able to hold on to the Senate by a very narrow margin in the range of 53, 54, or 55%. So in that regard, things are changing. There was a time when it was clear, or at least when people thought, that the Republicans would lose both houses.
Yeah.
But right now, they still have one just barely under control, at least until the midterms, both of them, and after the midterms, maybe just one. And of course, that then has an impact on what the US government as a whole can accomplish.
In your opinion, let's just assume the polymarket scenario. We hold the Senate but lose the other chamber. Do you think that will have a significant negative impact on direct decisions regarding the coins? That people will say, okay, now we're no longer, I'll put it bluntly, we can no longer push decisions through without any ifs or buts. Instead, we'll naturally have to get the House of Representatives on board as well. Do you see a significant risk that the House of Representatives will throw a wrench in the works when it comes to moving things forward?
Well, if you take the Clarity Act, for example.
Yes.
With the Clarity Act, well, the Clarity Act establishes something at the legislative level anchored. From a technical and factual standpoint, that is the role of the SEC and the CFTC. That means the two organizations that are actually responsible for carrying this out on the operational level are already in place. They're already doing that. The rules, the set of rules, are already being worked out there, but it will simply be a set of rules that these two units will follow. It is only this Clarity Act, the vote and the approval in the House of Representatives and the Senate, that turns the groundwork laid by the SEC and the CFTC into law.
Yes.
If this law is not passed, we will operate without it based on the existing regulations. If the Clarity Act is enacted, we'll essentially be operating on an approved statutory level. And the difference is precisely that large institutional investors are only allowed to enter a market for compliance reasons if it's regulated at the statutory level, and not simply at the level of the SEC and CFTC, which are responsible for it. And that means, conversely, that there are certainly many things that can be worked out at the operational level in the future if the House is split into different camps. But when it comes to eventually enshrining something in law, you need both chambers because it has to pass through both of them. And if one chamber blocks it, then it just won't pass.
This certainly makes it much less likely that the Clarity Act will be passed this year, but we plan to discuss the Clarity Act in more detail later on.
Now, if the Democrats don't want the Clarity Act, which doesn't seem to be the case, I mean, there are quite a few Democrats who say, we need this so we don't lose the battle against China, so it could happen. But the moment the Democrats generally say, we're against something, and they control the House of Representatives, that's the end of it. Nothing will happen. And
what's the current situation on polymarket regarding the passage of the Clarity Act this year?
50-50. No. Well, it's still the same. I mean, we don't have much time left, but everyone is, of course, working really hard to move things forward.
Let's start by looking at the US indices. We already mentioned last week that we'd be discussing the Dow Jones again in this interview. Here's the daily chart. How has it performed? You said that this is basically a sequence of US indices in terms of their performance and a possible rollover led by the Dow Jones.
That's exactly the key point you just made, Johanna. The Dow Jones is outperforming the other US indices these days, so that's the benchmark for everything. Why is the Dow Jones basically the one that leads the way? The Dow Jones is a more narrowly defined index. It only includes 30 stocks, and of those 30, about 20% are tech heavy. And that means it's not as volatile right now, especially when you look at the US-Iran conflict. In other words, the Nasdaq was down just under 2% yesterday, while our Dow, as you can see here, was down only 0.26%. So you can really see the differences there. And as I said, the Dow is leading the way, and it's going to be the first to hit its final all-time high. This is the fifth and final breakout, and it's going to be rough, heading toward a target range around 54,000. So here's the 1.618 extension. That's the magnitude I'm expecting. Yeah, and I know I'm not the type to count, but 1, 2, 3, 4, and that's the fifth. That's roughly how I picture the upward movement. The order is clear. The Nasdaq follows the Dow, with the S&P and Russell coming last. We'd already worked out this timing pattern in connection with the analogy to the bursting of the dot-com bubble, because now, once again, when the AI bubble bursts, we'll have a tech-heavy bubble bursting. And basically, the Dow leads the way, then the Nasdaq bursts, and in between, all the way to the Russell and our cryptos, we'll have 2.5, maybe 3 months. And that's why it's really important right now, and that's why we've included it, to keep a close eye on it. Is it hovering around 54 in this range? And can we then see a somewhat stronger downward movement? And then we can assume with a high degree of certainty that the rollover has begun. And then we'll just see how it goes down here, maybe back up here again, and then we'll see. And it is within this range that the other indices then develop. And with that, we finally have the upward trend and the rollover in the US indices. And as has been said many times before, the Dow is leading the way, and we're no longer talking about months, we're talking about just a few weeks now.
You just mentioned it, especially when it comes to rising oil prices and inflation concerns. Tech stocks are being hit harder, and naturally so is the Nasdaq's performance. And of course, with oil prices rising again these days, it's likely to have gotten into even more trouble. That means it's staying in correction mode.
That's right. We've been in correction mode since early June. That is since, I know, June 4th or 5th. So it's been a month and a half now that we've been running alongside here. Man, you can definitely talk about a range there with an upper bound and a lower bound, bounded by 0 and 1. Yeah, we saw that the wedge didn't actually form that way. It doesn't really matter much now, so I've moved it to the background in light blue. Man, you can see how things have really taken a nosedive here, and yesterday it was that minus 2%. We shouldn't be surprised if the Nasdaq corrects a little bit more. So we have A, B, C, and before it goes any higher, that would be one possible scenario in terms of this correction. Maybe C will settle at 28, maybe it'll go down a bit, maybe it'll stay above that. We'll just have to wait patiently and see what happens here over the next few days. Nevertheless, I expect that we'll see a continuation of the trend in the direction of this green upward pointing arrow through the major retracements, as always described, 618, 702, 786. It did break above that level once before, but didn't hold, but I think it'll make it on the next attempt, and then it'll move into the target range between 30 and 33,000. That's the final leg to the target, and you really have to put it this way. The Nasdaq is following the Dow, and that's important to us in that respect. Because we expect capital to flow in from the Nasdaq, so to speak, which, among other things, I always add among other things because the capital doesn't just flow in that way. So if all the capital flowing out of the Nasdaq flows into our crypto markets, then that would mean we'd explode. So some of it might flow to us and circulate here, the moment the Nasdaq enters the hype phase and the hype starts to level off a bit. And you can also see here with the RSI, we're right on regarding the sideways movement within this classic range as we're seeing it, even in the mid-range. And now we have to wait and see how the situation in the Middle East develops and how the situation surrounding SpaceX unfolds. And then we'll see if the Nasdaq is going to drop again or go straight up from here. But I'm very, very confident that it will go up. That was definitely not the Nasdaq's peak.
You could also see that the intense euphoria is subsiding just a little bit in the two most recent IPOs, which have been going anything but well these past few days, even though the defense sector, for example, has actually been performing relatively well lately thanks to AI. But people are definitely becoming more cautious, and even with stocks that would normally fly off the shelves like hotcakes without a second thought, you can now see a certain degree of caution among market participants. What we're also seeing, of course, and this naturally doesn't benefit cryptocurrencies, is a rising dollar. Accordingly, there's also a rising DXY, that is the dollar's index against major world currencies. But of course, that's unavoidable when the price of oil rises by almost 10%, right?
Yes, that's right, Johanna. So what we're seeing here contrasts a bit with what we just said about the Dow and the Nasdaq. The Dow and the Nasdaq are moving exactly according to plan, rising in a textbook fashion, just as we've been describing for over a year now, toward a final all-time high, toward a final peak. And every now and then we just have these crisis situations where the price of oil goes up. When the price of oil and the petrodollar go up, the DXY goes up too, just like it did yesterday. Yes, but nevertheless, I expect that the DXY will continue on this downward trend. As I said at the beginning, days like yesterday are isolated incidents, maybe 2 or 3 in a row, and then the whole situation returns to normal. We are currently in the purple support zone that we identified weeks ago. It's still in there. It was actually already well on its way down, and you can see this green penultimate candle here, that was yesterday's, where the DXY rose along with the price of oil. While the US-Iran conflict tends to fluctuate on a day-to-day basis, the overall trend remains the same. I expect it to keep falling, and that's really important because for a rally in our cryptos, it's crucial that the DXY falls before it eventually, once everything consolidates, once things calm down, and once Kevin Wersch's strategy prevails, rises sharply again. But before that, I believe it will fall once more, clearing the way for our cryptos and above all, for risk assets.
Let's take a look at Bitcoin on the daily chart. We've already mentioned once or several times that it's precisely this negative news surrounding Iran and oil prices that has the most immediate impact on Bitcoin and altcoins. We've seen that happen. That means the euphoria we've been experiencing recently has faded a bit, even for Bitcoin, but the chart doesn't look as dramatic now, at least on a daily basis, as one might have expected, right?
Yeah, absolutely. That's right, Johanna. We'd gotten used to all these nice green candles here. The idea being that it goes up nicely from the high 50s, the 50,000 range, and then you just get a few red days like that. That was basically Donald Trump's flight last week from Ankara.
Back, yes.
And back when he said, okay, we're going to go all in on this again. And of course, that's when it dropped for the first time. And over the weekend, he really went all out, and that's when it dropped a second time. Those are the surprises and the volatility I mentioned at the beginning, which we just have to live with. But you can see very clearly here that we've had a positive move and have now been trading for a week. That is, since the last interview last Tuesday, within a small range. That's why I've plotted it this way. Today we're slightly in the black. Now we'll just have to wait and see how things develop from here. Basically, what I want to say is that starting today, we've been in the base building phase for just under 160 days. Let me do the math. Since that day, we've been moving sideways for 40 days, and that's a week. So we have several different ranges that we're monitoring, but nevertheless, given the current situation, we're in, as I said last week, in no man's land. The resistance level of 66,000 US dollars and the high 50s, we're still right in the middle right in the middle of that. On the positive side, as we already noted last week, the 50-week SMA has crossed below the 100-week SMA. In the past, this has always been, as some analysts say, a very reliable sign that, as a lagging indicator, the low point in the bearish trend occurred before this crossover. So from that perspective, maybe we have here...
So maybe in that area.
Exactly. Yeah, exactly. So everything that was here, that might have been the low point, and things could start looking up from there. And that was ultimately the basis for my change in strategy, which we'll discuss at the end. So with that in mind, what could happen now, Johanna? We're right in the middle of it. It could drop to 60, it could drop again to 59. Personally, I do think that's likely, but in terms of probability, I think it's less likely than a move within this range than upward before it targets 66,000, then 76 after 66, and then 80, and just keeps climbing higher from there. We'll see in the next few days how we break out of this slightly oversold green range, but the impression Bitcoin is giving right now is that it's relatively strong. Even on a day like yesterday and the day after, like today, things actually look pretty good.
Aside from all the calculations, the resistance levels, the support levels, and even if you don't keep track, we can still see that Bitcoin reacts directly to fundamental news, such as Donald Trump's return flight from Ankara and the statements regarding the Iran conflict. But there's other fundamental news we usually keep an eye on as well, such as the Bitcoin spot ETF and, as we've already touched on, the progress of the Clarity Act. Is there any news on that front? Any positive developments?
Yeah, last week we had 197 million inflow into the spot Bitcoin ETF, as it says here. So it was once again a positive week, even though yesterday, Monday, swept it all away with just under $500 million. But anyway, yesterday was a special day with some special events. But you can see that institutional investors are slowly coming back. Things are starting to pick up again. The pros have been accumulating for quite some time now anyway. This is a classic accumulation phase. That's not an issue at all. There are plenty of people who are already buying in this range because they assume the market is bottoming out here, and whether they buy 5% higher or 5% lower doesn't matter to them at all. The range is right because they have specific targets, and those targets are higher up. Sure, that would definitely heat things up if the Clarity Act were passed before the midterms and before the summer recess. Donald Trump posted another message yesterday, heavily promoting this Clarity Act and once again bringing up the looming threat from China by saying that there are currently two major areas, AI and cryptocurrencies. And if we're not fast enough, we'll be left behind in both areas.
Overtake.
Catching up. And it already looks like right now, especially when it comes to AI, many large companies worldwide are opting for the slightly cheaper Chinese AI offerings. And from that perspective, the US is in the race everywhere, is way ahead everywhere, but not out of reach. And the moment something like the Clarity Act doesn't get passed this summer, that will certainly
elimination from the World FEM.
It's a pretty bad flat tire, especially when you think about the Tour de France right now, and it'll cause you to fall behind.
We don't have a Bitcoin weekly chart this week. Last week was more or less flat, so there was no change in the MACD or the RSI. However, we do have a different chart to show you. We last highlighted this shortly before Christmas 2024. Specifically, it's the P-cycle top indicator, which has generally identified peak points of cycles in the past. I say usually because the last time, namely at Bitcoin's supposed peak of $126,000, this indicator didn't signal it. You'd like me to say, as you predicted, that I'll bite my tongue and not do that. But what's the significance of this so-called P-cycle indicator?
Yes, I explained last week why I assumed that October of last year, with Bitcoin at 126 on October 6th, wasn't the final peak in this cycle because the Nasdaq continued to rise significantly while our coins were falling, and I thought the coins would follow the Nasdaq. That was my assumption. We had the P-cycle top indicator, emphasis on top. You already brought it up in December 24, because here's the thing. In all previous major cycles, it predicted the tops down to 3 days with pinpoint accuracy. So here in 13, 14, 18, and 21, as you can see, he always predicted the tops right here. How did he do that? There are two moving averages, the 1-to-1 daily moving average and the 350 daily moving average, which you then multiply by 2. And when the 111 crosses the 350, multiplied by 2 from bottom to top, then we get this dotted line, and that's exactly where the peak of a cycle should be. It's always worked so far. Now we know that's the high right here. October 25 with Bitcoin. And here you can see how the orange line, that's the 101, is relatively far away from the 350 times 2. So the peace cycle indicator, as it so nicely states here, didn't give a signal at Bitcoin's high. The gap is still quite large, and some analysts say there's a high probability that the orange line will cross above the green line sometime in 2027. In short, let me put it this way. In a negative light, in this case, the P-cycle top indicator failed for the very first time ever, and it also failed to predict the peak of Bitcoin in October 2025. Can't predict. Anyway, I mean, not even come close to predicting, because the distance is so great. And that raises the question, how should this be interpreted?
But if some of the experts and analysts assume that in 2027 the moving average will be pushed up from below or broken through, those assumptions differ from yours. You don't expect Bitcoin to reach its all-time high next year?
Nope.
So we can't rely on the P-cycle indicator either?
Well, for me, we've been getting questions on the channel time and again. Can you rely on this or that indicator? And that's why I just went with this indicator, which has never been wrong so far. I mean, we're not talking about 3 or 4 months here, but 13 to 22. It hasn't been wrong for nearly 10 years, and now suddenly it's way off. That naturally raises the question, why? What has changed in the market? Why aren't certain things apparent? So, how should we interpret that? I jotted this down here. Is Bitcoin increasingly behaving like an established macro asset and less like an isolated, purely speculative crypto asset? So, more and more institutional investors have been entering the crypto market, and with them, money has been flowing in steadily. Not like with retail investors who invested based on hype, thinking, now I have to jump in, it's going up, but rather, the institutional investors have, in principle, been driving the price up steadily. And what does completely continuous mean? The moment you don't have any hype, that is, no exponential movement, the 101-day moving average is, of course, is no longer relevant either. Yes, because the moment you take the last 111 days as an average and it goes up that high, that naturally means that the 111-day line, the orange line, also makes a massive upward move. And it didn't do that this time. And the only conclusion I can draw is the fact is that institutional capital has been flowing in steadily, not driven by hype, but steadily. As a result, the 111 stock couldn't really take off and gain upward momentum, and therefore couldn't reach the green one, the 350. And that's why I believe the P-cycle indicator had its place back when we were still in a time before ETFs, before institutional investors entered the market, when essentially the halving and retail investors were driving the entire narrative on their own in a 4-year cycle. But as for the future, I don't know if you can rely on this indicator. In any case, it failed just as much as I did. Wie ich.
It's good that you mentioned that now.
Was diesen Punkt hier oben angeht.
I can still remember.
Otherwise, he failed for some other reason.
Hey, I remember that you used to call that time before ETFs the so-called Wild West era. So now you assume that the whole thing has outgrown its infancy and is accordingly on a broader footing.
An established macro asset rather than an isolated speculative crypto asset. That's really the bottom line. We're slowly maturing as a market, and with that maturation come new rules that we'll have to adapt to. So you can't just take the rules from the last 10 years and say, and that's how it'll be for the next 10 years too.
To correct your mistake, or rather to make up for it, we're talking about the fact that you, or rather that one could say you realized too late that you'd achieved the absolutely optimized hodl with those 126K in Bitcoin, huh? But you can still salvage the situation by noting that the altcoins are making their move. And of course, we want to take a closer look at the altcoins now as well. Last week, we looked at the upside. That is the resistance levels for Ethereum and XRP. For Ethereum, things are looking a bit more positive right now in terms of resistance levels and a breakout to the upside. Why?
Maybe just one more thing. I'm expecting a relief rally in Bitcoin and, as you correctly pointed out, a significant gain in altcoins in its wake, simply because of this rotation and the reallocation of capital. Whether we'll see Bitcoin hit new all-time highs in the time we have left, I dare say, I doubt it. Of course, I'd love to be wrong. Where we might see new all-time highs, though, is with the altcoins. And last week we were looking at the big picture and asking ourselves, for example, what does an ETH need to do now so that we can say, okay, it's really on its way up? And he had support once, twice, 3 times. So you can really consider the 2500 as strong support, and we said, okay, it's on its way up. And that's why we took that out. As you can see here on the right side, it would need to reach a new high at this level. It's hitting a higher high, and that high is at 1,350. And then you can see how the ETH was already very close to that here last week. It was at 1,421, so it was actually already within striking distance. And then you see the second to last candle, that was yesterday, Monday. And I can definitely imagine, given how things are developing here right now, if everything goes really well, that we might even break through the 1,850 mark sometime this week, if everything goes well. If more Europe's messages come in, the picture will look different, of course, but there's nothing I can do about that right now. But based purely on the chart structure, we're within striking distance. And I can well imagine that we'll then break through to the upside. And that would, of course, be a great development. Sure, with a breakthrough like that, you usually end up back at the resistance that then turns into support before the price continues to rise. But I can definitely imagine, we can see that right here on the thumbnail too. Bullish signals are evident, and you can see here, and this is really important, that ETH is leading the way as the second largest coin, and the others are following suit, setting the tone. We're still pretty low, but yeah, the first hurdle is 1,850, which needs to be cleared. And once that's cleared, then we'll have a little bit more hope that it'll keep going up.
You'll definitely need that spark when you look at the next coin, namely your baby, XRP. Here you can see the gap or difference from the resistance levels getting a little bigger.
Yes, unfortunately, that's how it is. So here too, we've estimated a strong support level in the weeks leading up to this, which ranges between 91 and 93 US cents. I don't want to always pin it down to a specific cent amount. It's always a range. It always depends on which stock exchange the trading takes place on. There are differences there too. So between 91 and 93. And you can see very clearly here the analogy to the ETH. The ETH has run up against its resistance to fight it, and our XRP, to put it bluntly, is faltering. That's just the way it is, for whatever reason. Sell on
Good news.
On the good news. This whole SWIFT thing, which we've explained in detail on our channel, is it more of a competition with SWIFT, or is it actually something positive? I think it's a positive thing, and something big could come of it. And maybe that's also one reason why it's heading down for now. But looking at the chart, it's showing signs of weakness. And yes, I've said several times already, unfortunately, we have to expect that on 1 or 2 really weak days. If that should happen again, if we really do go through another washout, if Bitcoin drops massively again, we have to expect that it will test that range once more. It might happen, but it might not. The moment Bitcoin starts to rise and ETH follows suit, it will naturally rise moderately as well. But at this point, let's take another look back at the past. It's always been the case that XRP has picked up steam very late relative to all the other coins. That means the others had usually already surged relatively far ahead, risen significantly, before XRP then catches up in 7 league boots, as you can see here. And I can definitely see that happening. There's some good news on the horizon. We've talked about SWIFT, possibly the DTCC, and possibly the Clarity Act. The US government might pull a surprise or two of a different kind out of its magic hat, and well, we'll see what happens here. But we'll have to wait and see how things play out from here. And first, we need to address the 129 issue before we can talk about any further positive developments.
Going into detail about these positive developments here in this interview would actually go beyond the scope of this discussion, but all this background information, SWIFT, as you've already mentioned, possible hopes for the US government and other coins that are being issued. We've covered this in detail on the channel, gone over it, and you can read about it on Crypto Insights, this positive news that will hopefully spark some momentum for XRP at some point.
There's plenty of good news. It's just a matter of time when that is reflected in price trends, and you have to give it time. The stock market is all about patience.
Let's talk about spot ETFs again. In the past, Solana and XRP had generally seen inflows, while the rest tended to stay away. The picture has now reversed.
Yeah, I jotted that down here. So, Bitcoin, as we discussed, had an inflow of 197.4 million. After 9 weeks, another positive week, even though yesterday actually wiped out a lot of that gain again. Ethereum also saw an inflow, Solana saw an inflow, and this time, as you already mentioned, it's the other way around. After 9 positive weeks, now a negative week, though not a very big one, with a 7 million outflow. That means here are just over 7 million XRP was sold from the ETFs. So from that perspective, it's not really a big deal, but it does fit in with the trend we've seen over the last few days.
We've said time and again that whenever a decision is made or a move is taken as part of your strategy, we'll announce it in the interview, and we'll also announce it on the channel that very same day, maybe even within the hour. Last week was shopping day for you. Last Friday you hit the buy button and went shopping for coins. Just a quick note to put this in context, as you've already said 100 times. We're still in this sideways phase, so there's no roadmap, because what are we supposed to make up out of thin air when it's not moving in either direction? That's why we're now talking about the shopping day you kicked off last Friday with coins. We already posted this on Friday on the Crypto Insights channel, and of course we're mentioning it now as well. And you've already announced the strategy regarding the 50% in your last interview.
Yeah, the Tuesday before last, I was still on that kick, going all in, just in case, as I'd expected, there was a high probability of this market crash. On the day of that crash, I planned to bet all of my remaining capital, the money I still wanted to invest, on the coins XRP, XLM, and Canton. Last week, I made this change in strategy and said, okay, based on how Bitcoin is performing, the likelihood of a washout is decreasing, and the likelihood that it will go up is increasing significantly. And we're currently in this accumulation phase, as I described earlier. And I just wanted to lock in a profit, which is why I made this change in strategy. And as I said in an interview last week, I'm going to monitor the week, that is, the past week, to see how SpaceX performs, and I'll likely use 50% of my remaining capital to buy shares sometime this week. With the idea that in the event of a washout, I would use the other 50% there. In the event that it doesn't come to a washout, I'd wait until Bitcoin moves up to the resistance level of 66,000 US dollars, possibly breaks through it, then pulls back to see when there's another interesting entry point, so that I actually have a good combination of a somewhat safer entry combined with a slightly riskier one. That was the strategy change. And yeah, on Friday at 4 p.m, we went ahead and bought. I announced it on the channel 5 minutes later. I bought more XRP and XLM, and I bought Canton. I'd like to run a sample calculation. If you have 200,000 euros in remaining capital, then I would have spent, say, 100,000 euros last week, and that 100,000 would have been divided into 30,000 euros in XRP, 30,000 euros in XLM, and 40,000 euros in Canton, because I just don't have that one yet. That was just an example calculation. Yeah, we actually got quite a few questions on our channel too.
Yes.
The conceptual foundation is the Invest Depot, because in the Invest Depot, that is the portfolio we presented at the Invest Trade Show in Stuttgart, we said there are 3 major areas that it makes sense to focus on. One is the disruptive impact on the financial sector through cryptocurrencies and blockchain. The second is real-world assets in conjunction with tokenization, and the third is the bridge from cryptocurrencies and blockchain to AI.
Yes.
And that's exactly where XRP and XLM fit in. XLM wasn't included in the investment portfolio.
Yeah.
But as I mentioned in the video, we don't want to bloat the portfolio unnecessarily. It should be a reasonable number of coins, but you can certainly use XLM alongside XRP and buy more of it. You can also buy Solana in addition to Ethereum if you want. You can also buy some Tau in addition to Virtuals and Near. So the conceptual basis is the investment portfolio. The real world basis, that is what's actually happening here right now, is of course my personal story. I'm already invested in a lot of coins that are also listed in this investment portfolio. I'm pretty much all in because I just missed the exit, so to speak. And my personal strategy is simply to buy more of those and buy the new ones. If I were just starting out now and had to completely rethink my approach because I have nothing, then I'd probably take a slightly broader approach. But in terms of when to start, this accumulation phase actually makes a lot of sense with this approach. And when it comes to the other 50%, just to add that, Johanna, then it's quite possible that it's likely that I'll buy these 3 again in the same proportions. But it's definitely possible that maybe a 4th coin will be added, which would change the mix a little bit. So as far as the second 50% goes, it's very likely to be the same again, but I'd like to keep the option open to maybe vary it just a little bit over the next few weeks, because I can easily imagine that if we don't see the washout soon, we'll move higher past 66, maybe do another backtest at 66, so that it takes a little longer, and during that time, one thing or another might still have developed, and you might even take a look at a coin like Hype.
We're keeping an eye on which coins will actually remain interesting, dear Oliver, and by next Tuesday at the very latest, we'll be focusing again on what happens next. Maybe by then there will be some relief regarding the conflict in the Middle East, and hopefully that will clear the way for Bitcoin and altcoins to rise. For today, I'd like to say a big thank you and see you next Tuesday. Of course, I'd also like to thank you for tuning in regularly, despite all the challenges and of course the sobering circumstances such as the situation in the Middle East. But we've always covered all the important news for you, and I certainly hope you'll join us again next Tuesday.